Hi, and welcome back. Today, we will look at some of the best ways to finance your next prefab home. Shopping for a home can be a lot, and a good chunk of the stress comes from finding the best financing deal. To make things easier for you, here are some of the best financing options available. Let's get into it. Traditional and bank loans. One major obstacle to conventional loans and certain prefabricated and non-traditional homes is the lack of comparable sales for the appraisal process, which can prohibit the use of these types of loans. Many banks, in the case of traditional loans, may offer less favorable terms for these non-traditional homes, like higher interest rates and down payment requirements, as they are meant to reflect the bank's perception of higher risk. These homes come with a lower cost, but a higher depreciation rate can prove a major barrier, if not a full stop. This is why these aren't the usual methods for prefab home buyers, but don't worry, plenty is out there. Pay cash out of pocket. This isn't an option for everyone, but paying for your prefab home in cash is the easiest way. If you can swing it, paying with cash can eliminate closing costs, mortgage interests, appraisal fees, and an enormous amount of paperwork. With a mortgage, the bank will always do their due diligence before handing over a pile of money. They'll need personal finance statements, prior bank statements, work references, pay stubs, a good credit score, and more, depending on the bank. After all of this, you don't know that they'll give you the loan. Wouldn't it be easier if you just paid for it yourself? Unfortunately, not everyone has the option to pay in cash, and not everyone will want to, even if they have the money to do so. And that's why loans continue to be the go-to method, but I'd be remiss if we didn't at least mention it. HUD, USDA, VA, or FHA construction loans. Tons of government-backed loans are available if you tick the boxes. Construction loans require a 3.5% down payment minimum, and the VA and USDA loans have zero down options. It's all worth looking into if you're looking for a more traditional loan option, but each has specific requirements and guidelines to ensure you qualify. FHA, HUD, or the U.S. Department of Housing and Urban Development offer mobile home loans, including Title I and Title II. Title I can finance the purchases of new or used manufactured homes, refinance homes, buy the developed lot to place a home on, or some combination. Title II loans borrowers to finance a purchase of a qualifying home, along with the home, but comes with some requirements. It needs to be over 400 square foot, be constructed after June 15, 1976, classified as real estate, and a few other things. Where USDA loans require that your home be transported directly from the manufacturer, be at least 400 square feet, installed on a permanent foundation, meet the safety standards set, and be certified by its builder that the thermal requirements are met. These loans are made to increase rural housing and can offer significant cost-saving benefits with no down payment requirements. VA loans are specific to the military community, meaning you are qualified for a loan insured by the Department of Veterans Affairs. These loans can be used to buy a home and put it on land you already own, buy both the home and land, or refinance a home. Traditional and non-traditional loans are available, though limited to prefabricated, modular, and mobile homes. Working with a professional to see what loans you can and can't qualify for will give you the best idea of where you stand. Freddie Mac and Fannie Mae loans. Two other options for conventional financing include Freddie Mac and Fannie Mae loans, perfect for your less than conventional purchase. The Freddie Mac Home Possible Mortgage Program allows qualified borrowers to choose from fixed-rate 15 to 30-year mortgages and 7 or 10 to 6 adjustable rate mortgages. You might be able to secure a loan with as little as 3% down, and in some cases, you can use gifted or grant money to pay for this down payment. Fannie Mae mortgages are offered by lenders to borrowers wishing to finance manufactured homes through the MH Advantage program. You must satisfy several eligibility criteria, including a driveway and connecting sidewalk, carport, or a detached garage. The home must also meet construction criteria, including energy efficiency and architectural design standards similar to traditional homes. These loans can come with a 30-year financing and can be secured with just 3%. As a bonus, the interest on these MH Advantage mortgages tends to be much lower than traditional loans on the same types of homes. While these loans aren't available to everyone, they can narrow down the criteria for some people and give you the ability to secure the prefabricated home of your dreams. Personal loans. As mobile, prefab, modular, and non-traditional homes come with a more manageable price tag, you can use a personal loan in a way others can't for your purchase. Personal loans are flexible and can be used for nearly any purpose. They come with higher interest rates than mortgages and auto loans, as they're meant to be paid off differently. The trade-off, of course, is that, on one hand, you don't need to provide collateral, you won't lose your home if you default, and the process is significantly shorter with less paperwork. Personal loans are usually cheap, if not free, to set up, with no costly title, escrow, or appraisal fees. Your lender has no interest or control over your home, as the loan isn't secured. Personal loans often have a maximum of $25,000 to $50,000, though some can go as high as $100,000 or more. If you can find a personal loan that you qualify for that is large enough to finance your new home purchase, it might be a good way to borrow what you need. Chattel Loans. Chattel loans are generally used to finance personal property and designed to fund expensive vehicles like planes, boats, mobile homes, or farm equipment. Typically, the property will then guarantee the loan. These are even available if you don't own the land on which the home will be located, meaning it's popular for home buyers planning to rent a lot in a community for similar homes. Some lenders can offer chattel loans for purchases insured by the FHA, VA, and the Rural Housing Services, through the USDA. Chattel loans often have a higher interest rate, though with the rising interest rates on mortgages, there might not be much of a difference at this point. They often also have shorter terms, meaning higher monthly payments, but shorter terms could mean faster payoff if you can swing it. One big bonus would be that the closing process can be much faster and less restrictive with these kinds of loans, so the closing process has a much different experience than with traditional mortgages. Prefabricated homes have barriers to financing, but much lower barriers to entry. Financing isn't easy for anyone for any kind of home. Still, if you arm yourself with the right tools and information, there's no difference between financing a traditional home and something a little different. Not everyone can swing the massive sticker for a conventional build, but does that mean you can't have a house all your own? Being creative and looking into your options could be the solution you've been craving this whole time. This is an all-new adventure, and adventures are meant to keep you on your toes. The accessibility and affordability of these new prefabricated options can give you what you didn't know you'd been craving, and you too could escape the renter's market. Finally, right? If you like this video and want to see more like it, show your love with the like below and subscribe to the channel for more fabulous finds.